In this video, we're strapping on our seatbelts and embarking on a mission to understand why impulsivity plagues so many traders and, more importantly, how to keep it in check. Let's start with the impulsivity conundrum. You're monitoring a stock, and it starts to surge. Your heart races, and a sense of urgency takes over. You start thinking, if I don't jump in now, I'll miss out on this incredible opportunity. It's as if a switch flips in your brain, and you execute a trade without performing your usual due diligence. Now, here's the kicker: more often than not, right after you enter the trade, the stock takes a nosedive. You're left scratching your head, wondering what went wrong. This impulsive behavior can lead to hasty decisions and substantial losses. And that brings us to the impulsive trader's kryptonite. Impulsivity can strike when you least expect it. It's like having a mischievous trading genie that pops out of a bottle and whispers, "Buy now. Sell now. Don't miss out." And you find yourself following these impulsive suggestions without question. To conquer impulsivity, we need to get inside its head, understand the impulsive mindset. Impulsive behavior often stems from several psychological factors. First up, we've got the fear of missing out, FOMO. This is a big one. Traders often jump into trades impulsively because they're afraid they'll miss out on potential profits. It's like seeing everyone at a party having a great time, and you desperately want to join in, fearing you will regret not doing so. Next, we've got instant gratification. Impulsivity seeks instant rewards. It's like a child in a candy store who can't resist the temptation of immediate pleasure. In trading, it might be the desire to capture quick gains without considering long-term consequences. And last but not least, overconfidence. Some traders feel overly confident in their abilities, which can lead to impulsive decision-making. It's like thinking you can win a marathon without any training just because you once won a 100-meter dash. Now, let's unravel the impulsivity regret cycle. Impulsivity often leads to a cycle of behavior and regret. Here's how it goes down. Stage 1, impulsive decision. You make a quick, impulsive trading decision without proper analysis. Stage 2, initial satisfaction. The trade initially goes in your favor, and you feel like a genius. Stage 3, reality sets in. The market is unpredictable, and the trade takes a turn for the worse. Stage 4, regret and panic. You experience regret and panic, and you may make even more impulsive decisions in an attempt to recover your losses. Stage 5, repeat. The cycle repeats itself, and you find yourself in a constant state of stress and anxiety. Now, let's put all of this into a humorous yet painfully relatable example. Imagine you're at a buffet restaurant. Yes, we're back at the buffet, but this time, it's not about trading, it's about food. You walk in, you're hungry, but you're supposed to be on a diet. You start by loading your plate with a healthy salad, some grilled chicken, and steamed vegetables. You're feeling good about your disciplined choices. But then, you spot it, a glorious chocolate fondue fountain. The temptation is irresistible. Your rational mind says, remember your diet, stay disciplined. However, your impulsive side says, oh, just one dip won't hurt. So, you dip a piece of fruit into the chocolate fondue and savor the heavenly taste. But then, you think, well, I've already had one, so why not another? Before you know it, your plate is piled high with chocolate-covered everything, fruits, marshmallows, even some broccoli, because you were trying to be healthy. You devour it all, but what follows isn't as delightful. You feel guilty, sluggish, and bloated, much like the trader who impulsively enters multiple trades and watches their account balance shrink. Now, imagine if you had resisted the temptation, stuck to your disciplined choices, and enjoyed a healthy meal instead. That's the kind of discipline and self-control we're aiming for in trading. So, how do you tame the impulsive beast within you? Here are some strategies to consider. First, set clear trading rules. Next, pause and reflect. Third, use limit orders. Fourth, keep a trading journal. Fifth, practice patience. And lastly, seek mentorship. In conclusion, my fellow traders, remember this: impulsivity is indeed a formidable opponent in the trading arena. But by understanding its roots and implementing disciplined strategies, you can gain the upper hand. Think of it this way: instead of indulging in that chocolate fondue fountain at the buffet, opt for a balanced meal that aligns with your long-term health goals. Similarly, in trading, prioritize discipline over impulsive actions to achieve long-term success.